Hello guys, glad to have you on board again. Today we're going to do the weekly candle close kind of podcast today, heading into the weekend. First, we're going to clearly say no more about the cryptocurrencies, which literally hasn't moved at all. So nothing to add since I said previously. We're still working around this support area for quite some time. Doesn't actually mean that you've got to think about everything about anything in here. It's not because we're working around the support area that it's obviously going to break. You have absolutely no clue about that. Doesn't necessarily mean it's going to react positive either. We're obviously playing some long-term game, which means anytime we're going to pick a decision out there, it's probably going to drive prices for a 30% move at least. And I still say what I said. I think we've got more potential to the upside, but obviously that also means that the stop loss will be closer than the targets. So it's just a market making problem out there. It's just God knows what the market makers have in their books and how they will drive this market. Either they want to take down stop losses because they're closer than the stop losses, or there's just a buy wall they can pull through, and in that perspective they're going to search for the profit takings. And I pretty damn can't give you any answer. So that aside, let's talk about what actually matters right now. We've got the ECB who's been talking yesterday, kind of a freaking non-event, even though it should have been something. Should have been a thing, actually, just like that. It's just Mario Draghi was pretty much awaited by the market. We were waiting for something to come from the ECB. They just assessed what we already knew, so they've been switching from neutral to bearish risks. But they don't add anything about the monetary policy, so nothing new in terms of forecasting from the ECB. It's just that now most analysts think that there will be no rise in interest rates until end of 2019 and mostly December. So basically, if there is such thing, it's going to be end of 2019 and no more than that. So very accommodative ECB is expected by the market. Mario Draghi has done its usual job. So that's it for cryptocurrencies, and let's talk about the stock market. So the stock themselves doesn't really matter at this point. I would say Tesla is already validated. Microsoft and Google pretty much are on their way as well. Netflix already validated. Amazon could be pretty soon, but we have early signs of a strong reversal coming along the way. Still have Boeing, who is pretty much going sideways, even though we can clearly see that this trend is really mature. So I could very well forecast this to reverse and this to probably be a major top to forecome. Still waiting for this to play its game. It's Boeing is a heavyweight inside the Dow Jones, so this might expect why the Dow Jones has been so strong recently. And still the fact that no matter how, no matter what, I still tend to forecast that those markets have a very strong potential to the downside. But we need those heavyweights like Boeing to just drop valuations. And until they happen, we'll have to wait. I strongly think that this is wave one kind of pricing in here, and we've kind of done the sideways action heading into wave 3, so I very well expect this market to break down supports. The only question at that stage is it going to happen this week or next week with a down gap? You know that gapping down wave 3 is absolutely normal, just like we've done back then. We've been gapping. It's heavily suggesting this was kind of a wave 3. So the major part of trends. So you can very well expect that if this thing is about to drop, we could very well have some down gaps coming along the way on Monday morning, and I very well expect this to happen. So if you don't have Boeing on your portfolio so far, I suggest you take a little bit of them, because we might expect some drop downs early next week, and probably with downside gaps that probably won't be filled. In an index perspective, I would say today the only thing I'm going to do is this. Taking the DAX, so German index, it's probably the only thing I still wanted to put in portfolio, but basically I was waiting for further informations to do so, and today we're gapping up just to fill bearish gaps. So this is the worst possible case scenario for intraday traders, because the overall trend is probably bearish, but we've got a strong bullish outburst on this intraday basis that basically prevents you from selling. And in that perspective, it really is hard to trade because we need to sell. We have to sell, but it's pretty damn fucking hard to do that because you're going to fight strong short-term bullish movements. We're filling the gaps. So first thing first, you wait for those gaps to be filled. So you don't sell anything in between. The minimum to reach out to is 330 points for DAX. So we wait for those prices to be reached out to. There are two underlying resistance on top of that, 360 and basically 400. So I would say in that big area and putting a stop loss on top on the next gap that normally isn't filled, so setting a stop loss at 11,500, I suggest selling the DAX is the only viable trade to take today, and it has to be done over a week. For the reasons we said earlier, we might open down gap on Monday, which means if you haven't sold on the Friday session today, you will pretty much be off track. And I know taking overweeks trade can obviously comes out with a risk, but I suggest taking that risk is more than necessary for those kinds of trades. So obviously you need to assess that in your money management, so don't put too much leverage on those solutions. But I would pretty much tend to say that with a stop loss at 11,500 is more than enough. And even if we do have a gap up for God knows what reason on Monday, you shouldn't be gapping up more than that. So that's still to come, but I would say I rarely take a trade shorting at the top when we make a weekly close at the top. But there are some specific scenarios like that in which I will probably do this because I expect this market to close the week at the highs. So in terms of timing, I will just sell the DAX index at two precise timing. It's going to be 5 minutes before the cash market closes. So on my local time frame, it's going to be 5 p.m. and a half. I will have a look at this precise timing, and if I do have any bearish signal, I'll start triggering my trades at that stage. If I don't, then I'll wait for 10 p.m. my local time frame, the futures market close, and I'll obviously start selling a few minutes before the candle close. And yes, I'm going to take this overweek trade no matter what, signals or not. At 10 p.m. I'll have selling entries on the DAX, and that's a risk to take. But I expect if you don't be surprised if we do have a bearish gap on Monday. Everything suggests is going to be the case, just like it's been last week for the SPX. We've been closing exactly at the highs and gapping down on Monday, and I very well expect the Europeans will do just as well next week. We've got to talk about the bunds and then the euro dollar, and we're going to get this done. So the bunds in a weekly chart scenario still heading in this very dangerous area because we're strongly overcoming the weekly context, and I still tend to suggest that this is nothing close to a consolidation that is enough, and I think we've got more to the downside coming along the way. Strong signals of recession heading for Germany, and this is kind of a concern, and I expect something is about to change. Either the stock market will fall apart and the bunds may keep on rising, and one on top of the other, I should be able to rise myself some gains and a tiny loss on the one that I may have been wrong into. I could also take down the twos. We mean we can very well expect down bunds as well as down equities. And if that happens, obviously I'll be taking huge gains. But I expect at some point, I think one of the two can just be wrong. If the twos are right, then that's just as great as it could be. But I have to play both sides to just make sure at least I'll have the good one. So bearish bunds, bearish DAX, and we'll see what the future brings us. But in here we've got a strong and very interesting signal. If I'm wrong, that means the bunds will break the highs in here and install a fifth and final bullish impulse, and basically we'll never get there, and we'll just do this, but there afterwards is going to be a massive crash on the bunds to force calm. But I don't know. I mean, if we turn down negative yieldings on the 10 years for German bunds once again, and we may, I mean, if we head to those prices, it means negative yielding out of 10 years for Germany. And if we do that with a recession, with a recessive economy, then basically a crash will be down the road. So I hope we won't have faced that, because facing that may probably mean the end of the euro area, and I wouldn't very well like to see that happening. I mean, lots of people are speculating on that, the fact that the euro is obviously going to fail. I don't have that feeling, but I also assess the fact that I could just be wrong. And if we're heading that scenario, clearly I think this is the end of Eurozone in the 1 to 2 next years, because we're going to have a crash out of the bond market. That may probably cause the Eurozone to explode. But let's not talk about nasty things like that. Let's just hope it's going to play very well. It's going to retrace strongly and survive this. Anyway, so that's basically it. Euro dollar as well. I still tend to believe the same thing, that the euro is still strongly bullish, because if the euro falls apart, then same thing goes. I mean, if euro is heading to be below 1 in the long run, so there are really two trends to me, two overall trends. This one, in which euro dollar stays and retraces back to at least 1.35, not to say 1.40, which I think is where we're heading to. This is option A, and basically things will do great. We'll solve all problems in the euro areas, and basically we'll maintain the euro as a strong currency. If we do fall apart and get below $1 in a strong run, which means dollar strongly overcomes the euro, and if we're heading to 0.9, then it means the euro will worth shit, and basically you can expect those bond market to freaking panic as well, and panic in bond, and probably the euro area will split. But I don't think it's nearly going to happen. That's a bet. It's basically it's two faces of a coin. I really have no clue about what's going to happen. All I can tell is that on a day-to-day basis, yesterday we had Mario Draghi speaking. We broke a trend line, and it can very well be the signs of two different psychology. Either that means that we cannot sustain this price area and that we rejected the trend channel once again, which means we're going to break down the support trend channel and create another and third move to the downside, which is probable. Very well, it can happen. But if we just retrace to that trend channel to buy it out, and this is just typically the wave 2 kind of pullbacks, in which the market said itself that it wants to trend higher, but it needs to fear and bring fear just one last time to make sure that we don't have bears in that market. We're flushing the bears out of that supports, buying it out, and then we're strongly trend. So today all I've done is basically limiting my leverage, getting back to leverage 1, pure and simply 1. I was 1.25, so I take the 0.25 off the table at my entry price, so no gain, no losses on this one. But basically, I'm just waiting to see how we're going to play with that trend line. If we reverse and go down to and accelerate to the downside, means we're heading for that final wave. We can go down to 1.11 without necessarily meaning something. I mean, we should just go there, try to fuck up the context, and having some really strong and interesting buying entry signals. Remember that generally what I tend to say is that in consolidation structure, I'd like to have even numbers of waves. Okay, and for now I can count down 3, which is not necessarily the best case scenario. So having a fourth one to come in here wouldn't necessarily be a strong invalidation for the long run 1.40 forecast. It would actually be just confirming this. So I accept the price to go there. This is the only reason why I've been downwarding my leverage in that area, just to assess the possibility to go there. And if we do, you can be damn sure I'm going to fill in a lot of fucking leverage on euro dollar. If we do that, I strongly think that this is the one final wave that we'll have afterwards, after trending like freaking solid in the next forthcoming quarters. So just be aware of that. Uncertainty is still at play. Obviously, if this is just a wave 2 pullback and the trend the trend channel is paid in here, and if we break down yesterday's if we break up yesterday's high point with a candle close, I'll obviously put back some additional leverage on the euro dollar with a stop loss below that low. But for now, we need to build this low, and we're still trading that area, and this is basically a 50-50 choice. I don't know what the market will choose. This could be a sharp V reversal, and in that perspective, putting a stop loss below those lows can be done. But it's pretty damn hard to pick a decision out there. So not being able to pick a strong decision, simply reducing the leverage to my level of uncertainty and waiting for further informations to come next week. Bye guys, trade safe, and for the crypto traders, just wait for something to happen. Obviously this weekend is going to be a game changer, as we have a futures expiration coming along the way. So this is huge timing, and it could be subject to price manipulations. So be patient, follow the strategy, and you know that we can go both sides, but really wait for candle closes, because we could have some strong shadow candles on different exchanges because of low liquid context, high tension, and lots of people speculating with leverage, which means stop hunting is really along the way in here. Bye bye.